Good morning, everybody. Today we're going to be doing a recap of Tuesday's price action, but before we get into that, if you are new to the channel, please consider smashing the like and subscribe if you find value within this, and hit the bell notification so you're notified whenever a new video comes out. Right? What we're going to talk about today is using price delivery to help form directional bias and provide further confirmation to our directional bias, which enables us the confidence to take trades. Okay, let's begin with Monday's price action. And I'm not going to break down everything. What today is about market structure and being able to understand price delivery. And this is what's enabling me to take my trades. Okay, it's not just the ability to understand directional bias, it's how we use directional bias and how we use price delivery together, which gives us the confidence to take trades. Okay, so as we know from the market maker sell model, we're likely to have legs on the sell side of the curve. And this is an SMR. So this is a smart money reversal using a reclaimed order block, which took place during Monday's lunch hour, right? If we then see this displacement leg lower, this is seen as leg one. And then what do we have from Monday close all the way through Asian session into the London session? This is purely consolidation. This is consolidation before what? We move into phase two or leg two of the sell model. The sell model, the market maker sell model. Okay. Now, on Tuesday in the pre-market session, we had a breaker block form. This is seen here. You can see it, the breaker block on the 5 minute. The lowest down close candle, we have the high, the low, the higher high, broken through. This lowest down close candle is your breaker block. It's not as clear on the 1 minute. This is true, but this is why we need to be looking through all time frames, because time is fractal. So what I was looking at when price was being printed was this displacement leg in between 8:30, so the 8:30 high down to just before the open, and I was looking to see price move up into this breaker block into a short-term premium before moving lower. Why? Because this would have been phase two of the market maker sell model. We had the mass accumulation by the market makers to go short using the reclaimed order block. And if you guys haven't watched my video, my series on reclaimed order blocks, consider giving it a review, because there's a reason why I did it. We hadn't seen one in a while, and we have had two in 2 days, and they have absolutely printed. So market maker sell smart money reversal using a reclaimed order block. This is a market maker sell model, leg one, consolidation, looking for re-entries to go into leg two, right? Now, why I was looking at this was for two reasons. Okay, I wanted to get into a short-term premium before moving lower, and we also didn't get a fair value gap in the first 2022 model for going short. So we had these relative equal highs, okay, which got purged. Okay, tick one for market maker sell model. We had the low gets purged, right? So it's a market structure shift, right? We now have a market structure shift. So all of this is now saying, okay, the 2022 model is on. But what do we not have? We do not have a fair value gap. No fair value gap, no trade. I was therefore waiting for price to run up to this breaker block so I could go short. And Powell didn't give that opportunity. Price decided to dump. Okay? Price decided to dump. And where was it running to? And where was it running to? It was running to a breaker block formed on Friday. Because as we know from ICT teachings, when buy side is being purged and we're seeing aggressive movement lower or higher, it will run to the nearest breaker, right? So let's go back and look at Friday. Now, Friday we took this trade off of this breaker. We have the low, the high, the lower low, the purge of the sell side, the breakthrough. This highest up close candle is the breaker. So what I do is on the buy side of the curve, I will tuck the breaker block in. And then if I see on the sell side of the curve that price is moving lower, I'll drag them across, because I know price is going to treat them as quote unquote support or resistance, right? In this instance, support. Therefore, you can see I've dragged it across my chart and prices ran down to it. So I took a trade on this basis, purely on this basis, and there's other reasons and there's other confluences as to why price is running here. Bear with me 1 second, we'll go through them. We had an implied fair value gap. Consequential encroachment of this wick was hit, consequential encroachment of this wick was hit, and price was extremely heavy. So when this bearish order block formed, I didn't want to see price break above this candle. Therefore, I got in here. And I wrote it down to this breaker block for 5 handles. That was my AM session trade. I did take a small L up here. I was testing the market to see if it wanted to rebalance higher up into this civvy, but price was extremely weak and it decided to tank lower. So I took my small loss but reclaimed it back here, and then for the remainder of the day I took about 30 handles. So this is the name of the game, right? Small losses, big wins. Now, what other reasons did we have for this breaker block? We had multiple. We had this fair value gap on the daily chart, and as we know, fair value gaps are gaps and they work in quadrants. Okay, so 25%, 50%, 75%. 50% is a level within inside that fair value gap, coincided with this breaker block. We also know time is fractal, and on the hourly, this is a breaker block. It's a long-term breaker block. The low, the high, the low, low, broken through, retest. Okay, this is a breaker block. So we could see why there would be elements of consolidation here. But what I want to go through today, and what I want you to take away from, is understanding market structure and price delivery using market maker sell models and market maker buy models, because price moves from a high to a low, low to a high, and in between that we have sell side of the curves and buy side of the curve. This is a long-term sell side of the curve, and we get legs. So this is mass accumulation. This is a smart money reversal up here that took place on Monday using a reclaimed order block. Leg 1, consolidation through Asia and London before moving into leg 2. So what are we looking for? We're looking for price delivery to show us reasons as to why it would want to move higher or lower. So we'd either be looking for a market maker buy model, SMR, to move higher, or continuation to move lower. Now, why would we be looking to move lower? This is where forming directional bias and price delivery is so important, right? This is why the two in hand are so important, okay? Price is wanting to come and rebalance this displacement leg. We are therefore looking for it to run into a discount of this range. Anything below equilibrium is considered a discount. Price is running into a discount. The optimum trade entry is this zone here, between 62% and 79%. Price is ultimately running to that. When we are there for looking for low-hanging fruit, we could take the 62% of that displacement leg and look for other confluences in that area as to why price is going to run to it. And I'll break through why I had that area in a second, but first I just want to break through this piece of price action. So we were up here, right? We were still in a premium on the hourly of this displacement leg here, right? So at 10:30 on Tuesday, we were still inside a premium of this hourly displacement leg, and we had only had 2 legs on the sell side of the curve of the market maker sell model. I'm therefore looking for reasons as for signs to show signs of continuation or reversals. And what we had here is another reclaimed order block. This is showing that the market makers are piling in even more shorts to take the market lower. I'm therefore not looking for longs, because this is a huge indication in price delivery that we are going lower. So we can combine that therefore with the concept that price is wanting to run down into a discount, and now we're just using ICT concepts to frame entries and exits. Now, I know some people in our Discord took this trade and it was a valid trade, right? So 2022 model, we had a run off of this breaker, we had price wanting to reach into this OTE zone, we had the 2022 model, so the breaker market structure, the expansion higher, leaving a fair value gap, entry of the fair value gap, targeting this CIBI, which was inside the OTE zone of this displacement leg. Fine, happy trade. You know, if you wanted those 10 handles, there was your trade. But my viewpoint was, in the macro, we are bearish. So I was looking for entry short to capture a much larger trade. Okay, so price ran into this OT, and this would have been your first potential to go short, because we're looking for continuation lower into the discount of this displacement leg. Now we get the reclaimed order block. I'm not going to break down a reclaimed order block, so I've done an ICT series, and I've done one in my ICT series, so go and check it out at the end of this video. I highly suggest you watch it. It's what's enabled me to print money today, literally print money. Now, you could have taken any entries off of these when they were being rebalanced. Say you missed that and you were just waiting to see what price was printing before you made your final decision. I knew that this was reaccumulation. Every time this is pegged up, this is market makers reaccumulating because they can't do orders in bulk because it will tank the market without allowing them to fill their coffers. So all of this price action here, I knew this was just shaking people out. This was shaking people out who had got in before Powell and had trailed their stops too tightly, and they were taking them out before price made its big move. Therefore, when price made this aggressive leg higher, I was looking for entries to go short. We had this pullback, expansion higher, couldn't get above these highs. Right? Now, when this failed and left this fair value gap, that was my signal. That was my entry. Right? Fair value gap was my entry. Okay, and so this is where I got in. And what was I targeting? I was targeting the low-hanging fruit, which was this 62% of this displacement leg, and I also had further confidences, which I'll break through down in a second, but this is my trade. So I got in at 40.15, got out at 4,000 because I was expecting a retracement high and I was going to get back in, but price was heavy, so I got back in here and got down at 93. I did get back in again and I wrote it down to 82. So let's break down as to the reasons why I had 82. 62% of this displacement leg, tick number one. Tick number two is something else I'm currently working on, is RTH open and closes, okay? And fair value, true fair value, would be Tuesday last week to Tuesday this week. Now, when I see prices absolutely carving through, where is my target? It's going to be the following Tuesday, because that is fair, that is real true value. From Tuesday to Tuesday, a week to week, that's fair value, right? So when price was running down here, this was 82. This is Tuesday's RTH open price, right? And what did that coincide with? 62% of this displacement leg. That was my draw, okay? I got in up here. I had confidence to run it all the way down to here. Why? Why? What gave me the confidence to stay in this? Because of this piece of price delivery. This gave me the confidence to stay in. That is a reclaimed order block. It's a market maker sell model. It's reaccumulation on this instance to drive the market lower. They're not going to sell their position for 10 handles. They're just not going to do it. It doesn't make sense for a market maker to do that. This is accumulation to run the market short, which gave me the confidence to hold my trade. So much so, I ran into my other account and piled in. I got in at 401, ran it down to 390. Another 11 handles on my other account. Why did I take that entry there? Let's break it down. Price delivery and directional bias. Price delivery in this instance was this consolidation. And for those of you who have been with me a while, you'll know that I like a box setup, right? So let me just bring out my my little tools here. So we had this expansion out which broke above this consolidation, then we broke below, and then we broke high back in to retest this level of consolidation, and then we're looking for expansion lower. The way this works is the way it wicks out first is the opposite direction it's going to go out of. So sometimes you'll see it works in the opposite direction, so it'll wick out low, then high, then retest, and then move high. In this instance, this was further confirmation we were bearish, right? Consolidation, wick high, wick low, retest. This is my box theory. Now, if you combine that with this, which is what? This is Friday's open regular trading hours. Friday's open regular trading hours. Look at it, hit it to a tick. Where did I get in? Friday's regular trading hours, got a bit of slippage because I did the market fill. But it was combined with my box theory. Okay? Why did I run down to 39.90? Why did I run down to 39.90 and get out here? Because I started seeing consolidation. I didn't want to see price reverse on me. Right? I was happy to take my 10 handles and get out. it wasn't a trade because I had my other account was doing the full expansion. Okay, this was me just capitalizing in my bread and butter account another 11 handles. Okay, but what did price ultimately do? It ran down to what? It ran down to that 82, which was the discount range of this displacement leg. Target filled, guys. Target filled. When price got there, I let everyone know in the Discord that I had taken another trade. And I did. I did take another trade. Because we had hit that Tuesday, regular trading hours. For me, that was considered as fair value. So I was expecting a form of retracement. And what was I targeting? I was targeting this SIBI on the 1 minute. Okay, so this SIBI on the 1 minute was my first target. And then I took my second target. My second target was up here, right? So it was this. And I called this out live in Discord, right? It was up here at 98. Now, why did I take this? Because we know that we have this V shape, right? We always look for the highest, the swing high, and then just below it, the SIBI. Price is going to run into that SIBI and then act as support or resistance, right? So I had my, I was running for 98, and as soon as it ran through, I put my stop just below this SIBI. When it therefore broke back through, it took me out. So it took me out here, right? It took me out for like 91.50. So it was 7 handles or so. Price ultimately did run up to that SIBI, and it rebalanced a volume imbalance on the 5 min and also this SIBI on the 1 minute. Okay, price is now in reconsolidation, and that's where we find ourselves. But I hope you found that useful. The purpose of today's video was to help you or give you an indication of how I personally read price and combine that with directional bias, which allows me to have confidence in my trades. That's going to be it for me today, guys. If you found this useful, please do consider smashing the like and subscribe. And as always, if you're over in Red Pill or you're soon to join Red Pill, I look forward to seeing you on the other side. Take care. Bye now.